Today we're going to talk about cost management documents, what's what, and what you might need to financially plan and control your construction project successfully. This video follows on from our previous videos, which covered the topic from project inception to tender, and is part 3 of our series of 3 videos. This video covers the construction stage documentation. Before we get into it, let's just recap on our previous videos. In the previous 2 videos, we talked about the order of cost estimate, which is a document that sets out the details of the authorised budget and the cost limit, cost plans that aim to keep expenditure within the cost limit approved by the client, the final cost plan and pre-tender estimate that estimates the likely cost of the works that are described in the complete tender documents, prepared to seek tenders from prospective contractors, and finally schedules of works, bills of quantities, tender stage cost plans and the contract sum analysis, all of which are tender stage pricing documents. So let's get into the construction stage quantity surveying documents. There are numerous construction stage quantity surveying documents, so in this video we're going to focus on 3 key documents: valuation paperwork, cost reports, and cost plan monitoring. The valuation process, although differs according to the construction contract, generally follows a common process which involves a contractor making an application for payment, a quantity surveyor undertaking a valuation for works carried out up to the interim valuation date, and a contract administrator submitting an interim payment certificate or payment notice. The contract will include clauses that detail the valuation method, criteria which interim payments are to be made, payment timings, and lastly administrative rules to which those undertaking the valuation should adhere to. The application for payment is usually a spreadsheet detailing a breakdown prepared by a contractor that comprises an application for part payment for works undertaken since the last valuation. It is checked and signed off by a contract administrator who often delegates the task to a quantity surveyor. The quantity surveyor will visit the site and check that the work has been carried out either by measurement or a visual inspection. The basis of the contractor's application for payment will vary depending on the contract. Calculations can be assessed on activity schedules, assessed in terms of percentages achieved or completion of the activity, milestones that are reached on a pre-agreed programme, measurement against a bill of quantities, or stage payments against calendar dates, or a combination of all of the above. There are many ways for the quantity surveyor to present their valuation assessment. At Evolution 5, we prepare assessment paperwork as a side-by-side comparison against the application for payment, which shows number 1, the gross application, splitting this between contract sum, variations and materials off-site or materials on-site but not fixed. 2, we show deductions such as advance payments, retentions and previously certified amounts. And number 3, lastly, the certified amount for the payment exclusive of any applicable value-added tax. In addition to the valuation assessments, we issue to the contract administrator a valuation statement that pretty much mimics the interim payment certificate or payment notice, which enables the contract administrator to easily complete the paperwork. So the next thing we're going to talk about is cost reports. The production of a regular cost report informs the employer about the magnitude of the project's predicted or actual cost. Cost reports are produced by the quantity surveyor typically monthly, to keep the employer informed and to help them and the project team control costs. A cost report will include all the costs incurred by the date of the report where they are known, a forecast of the costs likely to be incurred during the remainder of the project, insofar as these can be foreseen and estimated, and risk allowance for the possibility of unforeseen costs. In the construction industry, there is an absence of a single standard type of cost report format, and therefore the quantity surveyor will develop their own format for cost reporting, unless of course the client has a specific formatting requirement. At Evolution 5, we try to keep it nice and simple for the construction stage reports. In the first part of our report, we show the authorised expenditure, which is effectively the contract sum plus any additional authorised expenditure. In the second part, we deal with the forecast cost. The forecast cost considers contract sum, risk allowances, provisional sums, prime cost allowances, provisional quantities, contract instructions, anticipated instructions, fluctuations, loss and expenses, risk allowances for the remainder of the contract, and any direct works by the employer. The difference between the authorised expenditure and forecast cost gives the remaining authorised expenditure. The last quantity surveying documentation we want to talk about is cost plan monitoring during the construction stage. In construction management and management contracting procurement, for example, construction projects are procured and delivered within a cost plan. The quantity surveyor will be responsible for monitoring the actual expenditure in connection with trade contractors or work contractors, and will produce reports for the employer, immediately advising the employer and the project team of any deviations from the cost plan. The quantity surveyor will advise the employer of any anticipated expenditure in connection with trade contractors or work contractors on any items likely to impact on either the final accounts or the cost plan, together with actual anticipated expenditure by the construction manager or management contractor in relation to reimbursable cost items. The monitoring document will usually be produced in a spreadsheet format, with the level of detail generally following the level of breakdown within the cost plan or that required by the employer. At Evolution 5, we keep monitoring of the cost plan simple by simply adding 2 new columns to the right-hand side of the cost plan totals. The first new column is titled Actual and includes the cost of packages procured, or where packages are not procured, the cost plan allowance is duplicated. In the second new column, this indicates the variance between the cost plan allowance to the actual cost. This makes clearly visible overspend or underspend on a package by package basis, and importantly calculates the total and either adds surplus to the contingency pot or subtracts from the contingency pot. So to summarise the documentation we've discussed today, whether it be valuation paperwork, which is predominantly aimed at payments, cost reporting or cost plan monitoring, they are all aimed at controlling cost by collecting actual costs and collating them in a format to allow comparisons with project budgets. Cost control is necessary to keep a record of monetary expenditure for the purposes such as minimising costs where possible and revealing areas of cost overspend. So, I hope you found value in this video. If you have any questions, please do not hesitate to contact us, and we really look forward to hearing from you.